are making their payments on time. Latest figures from the Singapore Commercial Credit Bureau show companies from the retail, construction and services sectors leading the way. Others are not expecting things to get easier anytime soon. And analysts say the mixed performance is here to stay for a while. Clara Lee tells us more.
It's been slow rather than prompt payments for the past 3 years. Data gathered in the fourth quarter of last year, however, showed a slightly improving situation, with on-time payments inching up and slow payments dipping slightly. Retail, services and construction sectors led the rebound. Hardest hit were companies in the manufacturing and wholesale sectors. Businesses are opening and orders are coming in, but for manufacturers, more than a third of payments are late, as industry players are still reeling from the impact of COVID-19.
A lot of companies, they are really very strained on their cash flow and reserves. In fact, some companies, they are operating at a loss for the past 2 years. And also, interest rate during the pandemic is really, very low. So some companies, I believe they overextended themselves with expansions and taking out loans.
No respite from higher inflation and costs, and there's only so much the authorities can do to help.
So ultimately, it's up to the companies themselves to assess their expenses and costs. Don't be afraid to downsize or, in fact, cut down on some operation first while demand is not high.
Manufacturers have also been lagging behind when it comes to prompt payments. They say rising interest rates is a major factor.
The interest rates have risen up quite significantly, more than doubling for many companies, even quadrupling for some. And this may cause greater payment issues for these companies. So as a consequence, some manufacturers may resort to delaying payments in order to make sure that their cash flow is significantly healthy enough to weather further storms.
He adds that more can be done by both industry players and authorities.
There are certain schemes in which finance companies help pay first to help ease the cash flow for the companies. And for the government, perhaps you can consider some of the COVID assistance packages that was previously provided, such as the temporary bridging loan.
Analysts say it'll be difficult to see if the trend of more companies paying on time persists. They expect the mixed performance across industries to remain, with those dealing with higher costs to continue struggling.